The Energy Transition Podcast takes you directly to the cutting edge of the global energy sector's shift, with a specific focus on the critical role played by oil and gas, as well as the pathways developing around a lower carbon future. Your hosts, Leslie Beyer, Energy Workforce and Technology Council's CEO, and Dan Pickering, founder of Pickering Energy Partners, are joined by Josh Lowry, president of Upright Digital. Each episode engages industry thought leaders in an exploration of market-moving trends and topics, including new technologies, ESG, capital markets, inclusion and diversity, workforce innovation, regulatory influences, and the voice of the people. Join us as the Energy Transition Podcast looks at the state of the traditional energy and oil field service sectors, emerging technologies, and the path ahead in a world of lower carbon energy development.
Welcome to the Energy and Transition Podcast. My name is Josh Lowry. We are coming to you live from the Upright Digital Studios in Houston, Texas. I am joined, as usual, with a co-host extraordinaire, Mr. Dan Pickering.
Josh, hello.
How are you, sir?
I'm doing great.
My voice is a little weak today, but my body is strong. I feel pretty good.
It's awesome.
Voice is weak. There's a lot going on. It's October, so there's football, there's baseball, there's college. It's just endless things to do, and the voice is barely hanging on. But I'm an athlete. It'll be there.
Nice.
Yep.
Well, we haven't sat here since we've had a burgeoning war in the Middle East. We've had an Exxon Pioneer huge transaction in the upstream.
Yes, huge.
So it has been a busy last 10 days or something like that in energy land.
It's very busy. You did one of these on your own, and I heard it was great. Lauren, the producer, texted me just to tell me how great the podcast went without me. She said it was really one of the best. I was like, thank you, Lauren. I appreciate that.
Yes, I did a podcast solo, and it was a little awkward having the guests sitting in that chair as opposed to you. So I did not call Andreka Josh ever.
Very good, good.
But we missed you. But it's good to be back.
You know,
and to be here.
The last time I saw you was at the Pickering Team Fest.
Yes.
That was a great event.
Yeah.
We loved it. Did you get good feedback from your customers and friends that came?
Yeah. Thanks for asking, man. We had 400 plus folks. Nice. And I think what we've tried to do since we started this conference is meld together conventional energy, new energy. We did the podcast with Bud Brigham live there. Who
is a complete stud.
Yeah, that was a great podcast. Really enjoyed chatting with Bud. And so it's an exhausting couple of days to host something like that, but it was very well received, and we'll be back next year bigger and better.
Loving hearing that. Well, we are back in the studios. There's a lot going on. We'll get to it here. I just went to a lunch today. George W. Bush spoke at this lunch, and one of the
name dropping.
Well, it's just my close and personal friend, our former president, George W. And one of the things he said was, they were asking him, what were your go-tos as president? And the first thing he said was, I always started on time. So on that note,
we're starting on time.
Let's do this.
Yes. So welcome to our guest, Mickey McKee, CEO of Kodiak Gas Services. So Mickey, it's a little bit of crazy ground for us because we didn't do a big preamble, pre-call. And so if I ask you crazy things or Josh says crazy things, we'll blame it on that. But it's really good to have you here.
Audience, that is Dan telling you that Josh did the prep work. That if Dan would have done prep work, then the call is made. But yes, this is how we do it when Josh makes calls. Yeah. We just set it up and wheels off.
And go. Yeah, yes. That's right. And so we're glad to have you here. As we always try to do, before we get going, tell us how somebody sort of follows along on the website. What's Kodiak's web address so that they can look at your business while we're talking.
Yeah. Hey, thanks for having me. This is a treat for me. Just so you know, as a recently IPO'd company, we IPO'd in the end of June this year. So I've met with literally hundreds and thousands of investors since then. So I promise you, your questions can't be as off the wall as some of the ones I've got from investors. So
good.
So we are Kodiak Gas Services. We're a contract gas compression company. Our website is www.kodiakgas.com.
Okay.
KODIAK gas.com.
Perfect. Thank you.
And you can lots of information there
Sure.
with our investor relations site and all that kind of thing.
Folks can dig in, and while they're furiously clicking and pulling up investor presentations and whatnot, just tell us a little bit about you. You know, you're now CEO of a public company, but where did you start? Are you a Texas person? Give us the Mickey story.
So actually was born in Great Britain, interestingly enough. My dad was a executive for ultimately ConocoPhillips, and so when I was smaller, we moved around quite a bit, and he was stationed in London when I was born, and so actually am a dual citizen, U.S. and Great Britain.
Nice, 2 passports.
Citizen. Yes, that's right. So sometimes it is beneficial to have one of those. So,
absolutely.
So like I said, but spent the majority of my life growing up in Houston after my dad got stationed here in the corporate office, and so my entire school-age life I've grown up in Houston, Texas. And so baseball player growing up, went to Tulane University, played baseball at Tulane.
Oh, good baseball player.
I don't know about that.
What position?
Serviceable. I was an infielder, kind of a utility infielder. And then, graduated from Tulane with a degree in mechanical engineering. Got drafted in by the Houston Astros and played 3 years of minor league ball for the Houston Astros. I got drafted in a round that they don't even have anymore. Okay. So it's like the 32nd round. So I was
massive signing bonus,
$5,000. And I got drafted as a senior, and we tried to negotiate a little bit, and they basically said take it or leave it.
Yeah.
So
I'll take.
So I played a couple of years of minor league baseball for the Astros, was getting paid $850 a month, and when I met my wife, and she got pregnant with our first child, and that's when I decided I needed to go join the real world.
The 5,000 ran out.
Yes, yeah. That's right. Get a real job and support a family. So I at that point I went to work for a company called CDM, which was a contract compression company. One of the original founders was a friend of my dad's, and I went into his garage begging for a job, and they put me in the
Came
field.
out of the garage with a job.
I did. I was working in the field with mechanics and learning the business from the ground up. So that was in the early 2000s. Learned the compression business, and was with them for I guess 8 years when Energy Transfer. Well, we were acquired by Regency Energy Partners. Regency was ultimately acquired by Energy Transfer. When that happened, it we kind of saw the culture of the business change a little bit. Kind of got away from kind of our founding principles of taking care of your employees and taking care of your customers, and probably stupidly and foolishly at that time in my life, in my early 30s, I said I can go do this better, and so I left and went and started a compression company, and
which was called
Kodiak
Gas Services.
Kodiak, yep.
So that's in 2010.
That was in 2010.
Okay,
and so early on attracted a small private equity firm, the Stevens Group, out of Little Rock, Arkansas. A family shop with an original commitment of $15 million. Started to grow, putting compression equipment on the ground, growing the business. Started to grow very rapidly.
Yeah, Mickey, let me stop you because for our audience, compression equipment. What does this do? So what do your assets do?
Okay, so we have a fleet of natural gas compressors. They are basically when natural gas comes out of the ground from a drilled well, it's at a low pressure. And so oil and gas companies contract us to come in and install our compressors to pressurize that natural gas up to higher pressure so it can either be put into a pipeline at high pressure or re-injected like they do in the Permian today, re-injected back down the hole to lift oil out of the ground.
Okay.
So that's basically in a nutshell what we do. And so where we differentiate ourselves from a Kodiak standpoint is we provide a very, very high level of service that goes along with that. These compressors run 24 hours a day, 365 days a year. So we have people that are out in the field that are on call 24 hours a day, 365 days a year, because when our compressors aren't running, our customers aren't making money. They're not either selling gas or lifting oil to sell oil. So From that standpoint, our revenues and our runtime stands directly in between our customers and their revenue stream. So we're a very, very critical part of their business. And if we provide a high level of service and make sure that our compressors are in tip-top shape and they're running at 99+% of the time, including kind of scheduled maintenance, downtime, and that kind of thing, then that creates cash flows for our customers, which is that's we've always
major selling point.
Yep, major selling is the selling point. Yeah. It really is all about service.
Yeah, and Mickey, are these pieces of, because compressors can range from the size of a car to the size of a bread box. I'm exaggerating, but it'd be bigger than a car. Do you run the gamut? Do you have all these assets? Or?
So we have all of those assets, but we actually specialize in the largest horsepower classes. We wanted to focus early on in our company on large horsepower equipment, which this is really, really, really big stuff, right? So our 3608 packages are 2,500 horsepower units. They're 83 feet long and weigh in excess of 200,000 pounds.
Wow.
Right, when they're fully assembled. So, you transport them on the road. It's a permit load. You've got to have police escorts, and you have multi 100-ton cranes to lift them and put them in place. So, not only are they very critical for oil and gas production, they are also very, very sticky assets. Once they are put in place, they don't move very often, which is why we get a lot of questions about our contracts that are typically 3 to 5 years, but our assets stay on locations much, much longer than that because of the stickiness of the nature of the production, especially in the Permian Basin. I keep coming back to the Permian because we're a very, very Permian-focused company.
Okay.
Over 80% of our assets are located in either the Permian or the Eagle Ford. Over 70% in the 70% in the Permian. And so, we that was kind of a core philosophy of the business when we started off is we wanted to focus on, we wanted to take the volatility out of what had traditionally been in the compression industry, where you saw natural gas prices affect cash flows and cash flow stability. And we said, I want to take that instability out of our business. I want to focus on only the large horsepower stuff that doesn't move, on long life production. And that's big horsepower, cat aerial type stuff. It's on Permian Basin production that we look out and see 20, 25, 30 year type
low down on the cost curve, sure.
You said that was a focus from the start. Like, how early on was that a focus? Like right away or within?
Yeah, I mean, we were actually focused on large horsepower when we were at CDM too. So we had shifted that direction, but we weren't nearly at CDM, my previous company. It was kind of before the Permian turned into what the Permian is today. The
reason I'm saying that, you start in May of 10, by June of 11, you've partnered with Steven. So, within a year, you're recognizing we're going to need some dollars behind us.
Yes, for sure.
And that's because you own these assets, correct?
Correct.
You own and lease, so it may sit there for 20 years, but you own it. And so the upstream companies are paying you dollars per month?
Yes. We have a flat monthly fee. That is the same month in and month out. So they get one invoice from us. Here's our fee. We're providing our service and the equipment for that fee every month. So that's it's not like a traditional kind of midstream company in that sense that is volumetric based or tied to commodity prices or anything like that. It's more looks like a take or pay type of a contract of a pipeline, basically.
Interesting. And so you've mentioned you're in the Permian, 70% of your assets are there, but it seems like there would be opportunities around kind of all the other things that are happening around energy these days. And so tell us a little bit about, but before you do, so your oil and gas fleet, if you will, do you think about it in terms of number of units or horsepower or what's?
Yeah, we really talk about our fleet in terms of horsepower.
Okay.
So we have over 3.2 million horsepower operating in the field today. Okay. And that's between, like I said, the majority of our assets in the Permian and the Eagle Ford, but we also have assets in the Rocky Mountains, Northeast, up in Pennsylvania, West Virginia area, as well as some over into some Oklahoma kind of mid-continent type assets, and then some over into Alabama.
And almost all this horsepower is around gathering and reinjection, so you're not sitting on big pipelines compressing gas to go down pipelines.
Correct.
You're doing gathering most. Okay.
Yep.
And so 3.2 million horsepower, and that would make you
really, I think we're the third biggest compression company in the U.S. as far as total horsepower goes, behind Archrock and USA Compression, but they're not that far ahead of us. Everybody kind of thinks of the big three.
Kind of a three-horse race.
Yep. Yep. Kind of three big players in the industry.
Okay.
Yep. And so we got 3.2 million horsepower in the U.S. or in the U.S. oil and gas business. And so what do you do in energy transition, quote unquote, and how big is that market for you potentially?
Well, I mean, I think in terms of energy transition, I don't think our job changes, right? We're not, since this has all kind of become a little bit of the I don't want to say the flavor of the month, but kind of more in focus for the U.S. and worldwide. Natural gas is going to play a part in the energy transition. And I think not only just a part, but a big part. And I think it's here to stay, especially with the types of reserves we have, with what's going on in the world with geopolitical, worldwide energy security. Natural gas is here to stay, guys, and
should be,
and it should be right. Short of us figuring out how to store solar energy in batteries that don't take up half the United States, right? So natural gas is going to play a pretty critical role in this, and we've always, even before the focus on energy transition and the green future and ESG came along, we have the youngest fleet in the industry. We have the most emissions friendly and emissions efficient fleet in the industry, and that was all done very intentionally from the beginning in the get-go. We wanted to focus on large horsepower compression, which is the largest horsepower kind of category is the Caterpillar 3600 series. It's very emissions friendly. We've done intentionally throughout the history of the company is anytime there's any type of upgrades where we can make it more emissions friendly, we do that. We've upgraded engines from 0.5 to 0.3 grams of NOx emissions. We're looking at different things today to kind of be the most responsible supplier of natural gas compression out there, right? So making sure that we get rid of fugitive emissions, methane slip, that kind of thing that is not just because we're, it's not because we've been asked to,
right,
by investors or anybody, but because we think it's the right thing to do.
Well, you said anytime we could, we did. What was that? I mean, and what was that, and when was that?
Well, we had a big push to upgrade our 3500 series engines from 0.7 to 0.5 grams NOx, or making them more basically less emissions on per horsepower basis, right? And so we made a big push to do that over probably 2018, 2019 type time frame, and I think that was a $15 or $20 million kind of initiative. We've upgraded a bunch of the 3600s.
If that was an energy transition initiative, that was early on. So, I mean, they were an early mover in that.
Yep.
Right? I mean, I'm saying if there was I don't want to call it a social pressure, right? But I mean, if
there really wasn't. But we look at it as a way to kind of future-proof our business, right? If we're the most emissions friendly, nobody's going to come in and undercut us, right? I mean, we said early on, we do a lot of things to take cash flow instability out of our business, right? I want to know what we're going to make every month, and I want to make a little bit more next month and a little bit more next month, and you look up and you're making a lot more, right? And so it's kind of what we told investors and as well throughout this IPO process, and what we've tried to do is we're if we give you guidance, we're going to hit that guidance, all right? And we're going to, and it's not going to be some volatile deal to where one month we make X and then next quarter it's 20% higher because we figured out something or we had a really quarter. It's never going to be like that. We're never going to have these spikes
because of the way you contract the business.
We're just slow and steady, up and to the right, steady as she goes. just constant growth and constant, like we went through the COVID pandemic in 2020, and our fleet never dropped below 96% total utilization for our fleet, right? Because of what we've done to kind of future-proof and our business with our contracts, with the production that we sit on, all that kind of thing. Our competitors' fleets dropped into the low 80s and high 70% utilization. And my competitors would probably say I don't charge enough for the service that I provide, but that trough of when they dropped to 80%, they lost 20-25% of their revenues, and we lost 2%. I'd say I got paid for it during that trough time period.
Mickey, you said you future-proofed, or you reduced the emissions of your equipment. You said nobody was really asking for it. So you weren't getting pushed by your upstream customers to do this?
No, we weren't. It was like, I think there was a lot of people talking about ESG, and we were just proactive about it at the time. And we said, look, this isn't going away, and we want to do what's right for our environment, and we want to be the best at what we do. And if my dad used to tell me this too, you can't be the best unless you're the best at everything you do, right? You can't be a premier company unless you have a premier safety culture in your company, and you can't be the best at this. You can't be the best compression company out there unless we have the best fleet. And if there's an opportunity to upgrade our fleet, then we need to do that because we want to be the best. And it's kind of our philosophy. If we're going to do it, we want to be the best at it. We're going to be the best at everything we do.
Is your dad still alive?
He is.
What does he think about what's going on?
He loves it. He's a very, very large individual investor in Kodiak.
I was going to say, I hope he was an early investor in the business.
I think you may have met my dad, Rob McKee, before, Dan. I know he knew Maynard well.
What was his? Was he a Kerr McGee guy?
No, he was with ConocoPhillips.
Oh, Conoco.
Yeah, so he was.
Now I've got to go look him up to see if I recognize his face.
Yeah, so when he was one of the top 3 guys when Conoco IPO'd from DuPont, and then when they did the Phillips merger.
Okay.
Yeah,
I bet I've met him.
I know he knew Maynard Holt very well.
He's making me feel. Mickey's making me feel real old right now. It's like, oh, you'd know my dad.
He was the executive vice president of exploration and production worldwide for ConocoPhillips. So
awesome.
When he retired.
So let's get the hell off this topic real fast.
Sorry, I apologize.
No, that's okay.
Well, when you were a young lad, you.
Yes, exactly.
Yes, yeah.
I was
Everybody knows
a young analyst at that point in time.
Yeah.
So does the U.S. taking gas out via LNG, does that change your business? Is that an opportunity set? Is it?
It doesn't change our business other than the fact that it creates a tremendous amount of demand for what we do.
Okay. So it's driving gas demand.
Yes, it is. There's, you look at what's happening in the LNG export capacity world right now along the Gulf Coast, which we are right next to from a geographical proximity perspective, with the majority of our fleet being in the Permian and the Eagle Ford. That LNG export capacity is going to increase by 10, 15 BCF a day between now and the end of the decade. From a compression perspective in the United States today, just to give you a little bit of some stats here, to move a BCF a day worth of gas, you need about 500,000 horsepower of compression, from the wellhead all the way through gas injection, gathering, plants, inlet compression, recompression, propane compression, and then mainline pipeline compression to get it somewhere like to the Gulf Coast to an LNG facility. So if you think about that and see a 15 BCF a day increase in basically natural gas outlet, outlet. So you think that
7.5 million horsepower.
7.5 million horsepower will have to be installed between now and the end of the decade. And quite frankly, that we can't keep up with the demand for compression today. All of our competitors.
And this is just domestic.
This is just domestic.
Yeah.
Caterpillar can't keep up with it right now. Their lead times for new engines today are 60 plus weeks out.
You mentioned these these calls you had as you were going public. I imagine this story played really well. Mm-hmm. The consistency, the demand, the growth.
Yep. It's really an interesting thought, because people are going, these investors, they were like, well, what's going to happen if there's a massive shortfall in compression? And I'm going, I don't know. We've never seen demand like there is today for compression services. And it's not just us, for everybody. All of our competitors are sold out. There's no excess capacity in the world, in the U.S. today, because of a lot of different drivers, right? As a newly public company and seeing a lot of other companies, there's a tremendous amount of pressure for capital discipline and returning capital to shareholders, right? So capital budgets are lower than they've ever been.
For the upstream businesses.
Yep. As well as ours too, right? So as well as compression companies that are spending money on that. The way the Permian production profile has grown, Permian gas is just it requires more compression horsepower than traditional conventional resources that produce gas at higher pressures. But the Permian is a very, very tight shale rock, and it produces at very low pressure. And when you got $80 oil and you got these guys drilling 2, 3, 4, 5 mile laterals now, that require 16, 18 stage fracs, those have to be gas lifted to get that oil out of that formation. And so the compression intensity of Permian wells and which is the production driver of U.S. domestic natural gas and oil production, it just requires a tremendous amount more compression. Yep. And so it's sucked up all of the excess capacity in our industry, in our little kind of niche market here. And it's going to be really interesting. And then you talk about you're going to need 7.5 million more horsepower for 15 BCF a day of LNG capacity that's coming on board.
Before we started, we're on camera, I asked you, there was a facility on 290 that I thought was yours. Mm-hmm. It's one of your packagers, right?
Yes, one of our vendors. Yeah.
One of your vendors.
Packagers. Legacy Equipment. We'll give them a shout out.
Yeah, there you go. They're going to listen. Yeah. That's a nice little shout out to them. They're giving you some nice advertising on 290. Very nice facility out there.
Yeah, Mr. Nickel. Yeah.
Yeah, Bob Nichols. That's right.
Yeah.
So what are you guys doing to prepare? Are you continuing your building, your expansion? What are you guys doing?
We are. We're building our growth capital budget for next year, not based on what the market demand is. I think that we'll probably end up, and I probably shouldn't say this, but
I love it when people say what they shouldn't say.
We'll get a call from his IR department going, we're going to need you to delete minutes 32 through 33.
No, we'll we're going to probably increase our capital budget by or stay kind of where we're at from this year, because we want to make sure that like we've told investors, we want to be a growth and a dividend company, right? So we want to be able to grow the business by 8 or 10% a year and pay a really good kind of higher than S&P 500 energy index kind of dividend of 6 to 8%, right? 5 to 8%, somewhere in there, depending on where the stock price is. And so, kind of targeting a total shareholder return of the 15% per year. And
that'll make it in there. They won't cut that. That was great,
right? I dialed it back from what I wanted to say a little bit. But
well, it has to be hard, right? Because what you're saying is that you can see that the demand side's going to look good. Mm-hmm. And there's nothing more painful in the world than telling a customer no.
That's right.
Or telling them, great, want to work with you next year.
Right.
Yeah, or potentially losing market share.
Yeah.
But, we want to focus on what's right for our shareholders. And we believe that a certain level of growth CapEx is right for our shareholders. Mm-hmm. And that's what we're going to do. And we're going to be very disciplined about sticking to that. And that's something, and will we miss out on jobs? Yeah, I think we will for sure. We have customers coming to us, begging us for more equipment today, and we're saying, no, we're not going to do it. And because our capital is spoken for. We have signed contracts on every dollar worth of capital that we're going to spend for 2024 already, as well as pretty close to through the first quarter of 2025 now. So we're planning in advance. We know, again, volatility of the business. We can see a year out.
You don't sound like the CEO of a new publicly traded company. I mean, really, you don't. These answers are smart answers in with respect to, capital discipline. I mean, it doesn't sound like you're not trying to be smart with shareholder money. I mean, has the transition from being privately held to publicly traded been difficult?
Not really. I mean, it is. There's a lot more to do today than there was 6 months ago.
A lot more to do, meaning just more people to talk to, more
Of
stakeholders,
this, right? More telling the story, right? My biggest job for the company right now is to tell the story, and nobody knows us as a
You're about to be
big
very
privately.
famous. Well, congratulations.
Market cap's what, about $1.5 billion,
held.
something like that, $1.3 billion?
Yep.
Yeah.
Yep.
Yep. So the transition from private to public, that.
Yeah, it's nothing. It hasn't been hard, but there's a lot more to do, right? We've got, scheduling investor conferences and making sure that we're doing, that you're meeting with analysts and investors and buy side, sell side, all of the above, right? And telling the story. We've got a great story to tell, and I love telling it. And it'd be different if you were trying to sell ice popsicles to the Eskimos, right? And that's not what we're trying to do here. There's a tremendous amount of demand. We're very good at what we do, and I love telling the story.
Yeah,
I came from the sales department, and that's the easiest sell in the world when
you're passionate about it, you believe in it. Yeah,
exactly. And
it's clear.
And we have a product somebody wants that a lot of people want.
Yeah.
More
Mickey, you're not in the Haynesville. That's a big gas area. You don't mention that as a core area.
It is not. And the reason why is that Haynesville formation is a lot more higher pressure than
it doesn't need as much compression.
It doesn't need as much compression. And it's really an area that we one of the other core things that we built into our fleet even from the get-go is we wanted to have a very standardized fleet. And we knew that the low pressure gathering type of compression equipment was where we wanted to be. Yep. And so to move into the Haynesville, there's some opportunity over there, but to move in the Haynesville, it would require us to kind of get out of our Southwestern Airlines model fleet uniformity, if you will. Yeah. So we never really chased it. There's always plenty of business in the Permian and Eagle Ford and other places that, so.
That's a great example, isn't it? The Southwest, just consistency. Yeah, I like that.
Yep. Spare parts, training, all that kind of thing. We had equipment in the Rocky Mountains for EOG is the same equipment that we have for Devon in South Texas, and the same equipment we have for Pioneer in West Texas. Right?
That's a great example.
So, if something happens, they lose wells or something up in the north in the Rockies, we can load that unit up, bring it back to the Permian, and put it back to work.
Yeah. You So you're an owner of compression assets and you're a servicer of compression assets.
Correct.
Do you build them?
So we don't build them. So we buy the engines from Caterpillar. We buy the compressors that couple up with the engine from Ariel, and then we're OEMs for each of those companies, and then we give those components to a legacy to over on 290, and they build the package, basically skid mount everything, build the engineered vessels that go along with it, and the piping and the electronics and all that kind of thing for the controls and all those kind of things. Put all that together, and then
out to the field.
Yep.
So you need to be up 99% plus of the time for your customers. But it sounds like you don't do any performance based. You said we do X amount of dollars per month.
Yep.
And you don't make 2X if you're up 99.5% of the time and 0.5X. So you promise service and you say, run us off if we don't deliver uptime.
That's right. Okay. And so if we, so we guarantee 98% mechanical availability in any month. And the way our contracts typically are written is if we don't perform to those levels for consecutive months, then our customers have the right to terminate our contract.
Yeah.
And to date, we've never had a contract terminated for that reason.
That's great.
Mm-hmm. And you mentioned Pioneer as a client. Pioneer is about to be Exxon. How do you think about? I mean, it seems like there's a lot of companies combining. Is that bad for you, good for you, indifferent for you?
I think it's good. It's TBD on this Pioneer and Exxon deal. Exxon's already a customer of ours on a small scale a little bit, and we've got a good relationship with them. So I don't anticipate there being any issues. But I view consolidation in our industry as generally a good thing. I think that what you're seeing in the Permian today is, it's no secret that longer laterals in the Permian make more efficient wells, and creates drilling efficiency, well drilling efficiencies. And so I think what is driving a lot of this is the desire to have more contiguous acreage in the Permian Basin. And if you look at Pioneer's acreage versus Exxon's, very contiguous. It matches up very well. We saw the same thing with Targa bought Lucid Energy Group, was a private midstream company about 2 years ago or something, and we didn't do any business with Targa at the time. And everybody, oh gosh, they bought Lucid, or what's going to happen, and are you scared about this? And now now Targa is one of our best clients, customers, and they've really adopted a contract compression model because we have provided them with really great service. So I don't anticipate there being any issues with us with this Exxon purchase of Pioneer. Pioneer's been a great customer of ours. They're our biggest customer. Yeah. So Exxon's about to be our biggest customer.
Right.
So
that's great.
Pioneer's who we set one of our first units in the Permian Basin.
Oh, really?
With. Yeah. So
if we looked back over a long period of time, back when I knew your dad, if we looked back, there has historically been a lot of leverage in the business.
There has.
How do you think about leverage, and what's an appropriate amount?
Yeah, I mean, compression companies have traditionally run with higher leverage than probably the world views leverage today. And there's times in our company where we ran with 6 or 7 times leverage, debt to EBITDA. But, from our perspective, we were growing so fast during those times that the EBITDA contribution just couldn't come on fast enough to keep up with the debt levels, because it's a very capital intense business. But as a private company, and you got banks that are willing to finance it for you at those levels.
I assume against customer contracts, right?
Yep, exactly. And the assets actually are maintain their value very, very well, right? And so we do business with a bunch of a very large bank group that's been doing this for a long time, since back when I was with CDM, and it's people made their careers on financing compression equipment.
Okay. And there's concern that banks are backing away from the energy business. Are you seeing that?
No, we're not.
So your guys, they love your.
They do, and we're finally reached kind of critical mass to where we're starting to delever, and it's another part of the capital discipline, right? We're as a newly IPO'd company, we're right at 4 times leverage today, and we've stated that our target goal is between 3 and 3.5 times leverage. I think that's an appropriate level of leverage for what our investors want to see. I think it's lower than we need to be, right? But leverage is only an issue when leverage is an issue, right?
Right. No, for sure.
Let me ask this, Dan. I mean, I feel like this is my layman question here.
Go for it.
So I feel like this is an infrastructure product more than like a pressure pump, right? A frac fluid in.
Absolutely.
Right? So I feel like the banks would be less scared of this type of product than a fluid in or a frac pump.
Yep.
Right? I mean, so when you say, are they reluctant, or your question, are they scared of this? Wouldn't this one be one they're running to invest in more so than, again, I'm just going to stick with the frac pump.
Yep.
Because this one has to be used all the time.
Yeah. I mean, if I played it back, you have very large pieces of equipment with long contracts with credit-worthy counterparties. So the banks ought to be pretty comfortable with Pioneer, now Exxon's credit.
Yes.
And so the only thing between them and that customer is you guys and your ability to make sure you get paid, right? And so then it's the company's track record on things like uptime and ultimately profitability. It does make me wonder. So in a service organization, I always like to help people put in context. If I'm a guy that's servicing, I work for Kodiak and I go out and make sure a compressor runs in the Permian. How much money do I make? How much turnover do you have? And how hard is labor right now?
Labor is a challenge right now, for sure, especially in the Permian. It's the overall level of talent that's available to be hired today is less experienced than it ever has been in our industry. So we've actually had to adjust our model a little bit to add more people and run a bit heavier from a technician per horsepower perspective, to try and combat some of those things and have more people in the field so we can pull a portion of the workforce out and go take them and train them up and take them to training classes and that kind of thing. I don't know what our average salary is out there.
Are they hourly or are they?
Yeah, they're hourly.
Okay.
Hourly with on a 40-hour week with overtime, that kind of thing. So is our typical technician, and we have a range of pay scale anywhere from entry level to kind of senior, advanced technicians.
But ballpark, and again, I'm pushing, but if somebody makes $15 at McDonald's, are you losing people to that? Are you $50 an hour guys?
We're probably the ends of the spectrum is probably $25 to $45 an hour type guys.
And people are tough.
And girls. Yeah. Actually, we have some female technicians now too, which has been something that we've been working towards.
Well, and you mentioned early on one of the reasons that you guys started the company was employees. You know, the culture. What are some of the things you've done to maintain or build culture that you think can kind of keep people that are hard to keep and get?
Yeah, I mean, look, we've always said we want to treat our employees as something other than just a number. We want to offer the best benefits packages in the industry, and give them. We pay quarterly bonuses. We match dollar for dollar up to 6% on our 401k. We pay 100% insurance for every one of our employees and their entire families.
That's a big deal.
That is a really big deal.
Yes, it is. It's a very big deal.
And and we pay a vehicle allowance instead of making them drive a base model F-150 truck out in the field, right? So they're driving their own vehicle that we're giving them an allowance for. And so our guys pull up on location and they're in their F-250s with their jacked up tires and
because they like it, because that's their personal vehicle.
They think is cool.
Well, they are cool.
That's right. And so everybody knows when we're on location. So, and
but the real question is, do you have a jacked up 250?
I don't have a jacked up 250. I have a 150.
Okay. All right. And it's a gas consuming, not a gasoline consuming.
Yes.
Yeah.
That's correct.
So
yeah, my CFO that was in here earlier, he has the 250.
There we go. Yeah. Perfect. I'm curious, just to kind of take a little bit of a step away from the business. So you start this business. I assume you're bootstrapping it. You go, wow, I can grow it, but I'm going to need money. You talk to Stevens. They get you $15 million. I mean, somewhere along the way, you got a hell of a lot more than $15 million. I mean, kind of talk us through, what'd you learn building a business from a $15 million investment to $1.3 billion public company?
Well, there was a lot of near-death experiences
I'm
early
sure.
on. We called it the knife fight. We were in a.
I'd love to have an entire podcast about just that. By the way,
yeah,
seriously, I bet it's the best stories ever. But keep going.
It is. I mean, we were in for a long time at our company. We're in a constant state of capital raise.
Yep.
Trying to figure out how to layer in mezzanine debt to leverage more, and so we started out with a $15 million commitment from Stevens, and we pushed them. Ultimately, they went up. We pushed that. We drug them along, kind of kicking and screaming, to $100 million that they had in the business.
That's pushing, kicking and screaming for sure.
And that became kind of one of their larger investments they had ever had, right? And so about that time that they said, look, we can't, you guys are
Right.
a rocket ship of growth. It's taken off. We can't keep up with that anymore. And so they launched in 2018, they launched a process to sell the equity in Kodiak. And so we ran that process in February of 2019. EQT was the successful bidder on that.
EQT, the infrastructure
Yes,
player,
correct.
not EQT Corp, the gas
That's
company.
correct.
Yeah, okay.
Yes.
EQT Corp, the private equity business.
Yeah, private
Okay.
equity. This is their
Good
US,
distinction there.
US infrastructure arm. So it's the first real infrastructure investment in compression ever, really. And so that's we kind of hang our hat on that a little bit too. But they came in, they recognized the infrastructure like the
Consistency
of our business, yeah. And so they came in, they kind of recapitalized the business a little bit, and properly equitized the business.
And this is 19. When in 19 is this?
It's February of 19.
Okay.
In October of 19, that same year, we made a pretty sizable acquisition in a company called Pegasus Optimization Managers, who the CEO was of Pegasus, is a former colleague of mine at CDM. Chad was running operations, I was running sales, and we both split off and started
Your own business. Yeah.
And so Chad really did a great job building that business. It was a little bit smaller than ours because he kind of had we had a year or two head start on him. And,
Josh, I don't know his dad.
You know
Yeah.
Chad's
I don't know Chad's dad.
But Chad,
But you were a little bit bigger.
yeah, we were a little bit bigger. We ended up buying them. Apollo backed them. Apollo ran a process. We ended up buying them as well. Chad's still with us as our COO today. So
How many horsepower did they have?
we were probably 1.5 million at the time, and they were probably 800 at the time. Really boosted us, gave us pretty critical mass to kind of get ready for the next, IPO, the next kind of
The next
event.
leg, some scale. Yep. How many employees at the business now?
We have just under 800 employees.
Okay.
The reason I was trying to get that 19 time frame down was
Right. So we bought
Yeah.
Pegasus in October of 19, and we're in the middle of integrating almost $1 billion business into ours, and COVID hit in March.
back to the knife fight.
Right.
Right.
Yeah. So got that done just before we sent everybody home.
And you're private equity, so there's no PPP for you guys.
Correct.
So you had to.
But our business never stopped, right? We were critical infrastructure that had to keep running, right? So our technicians weren't locked in their houses and couldn't work, type thing, right? They weren't furloughed because they worked at a restaurant or something.
Yeah.
They were still out in the field working on keeping our compression equipment running because
Have to.
it's infrastructure, right? And so we made some revenue concessions with a few of our key customers to help them out and kind of share some of the burden. But we had throughout that time, we made some significant cost cutting measures that really kind of offset that. And so offset the concessions that we gave. And so our revenues never dropped more than, I think, 2 or 3%.
That's incredible.
Yeah, how?
And
So
we throughout COVID, this company grew horsepower, grew margin, and grew EBITDA. And I bet you that if you tried to lump us in the OFS kind of world, I bet there's not enough oilfield service company in the world that could say those three things.
You mentioned, you said you gave some customer concessions, but you also lowered your costs in that time period. Mm-hmm. How do you do that? What does that mean? Were you overstaffed, or did you run leaner, or what happened? Because the number of horsepower out in the field is not changing much,
Right.
But you're getting your costs down.
Yeah, we just ran leaner, right? I mean, we never cut anybody's benefits. We made sure we never did any of that. We actually skipped one quarterly bonus that in the fourth quarter we paid a double bonus and made up for that. But a lot of our business is we have a lot of costs for fuel for trucks and that kind of thing, and we have taking customers out for meals and all that kind of thing, and we basically took all of that stuff that was not critical to
Mission
operating
critical,
that unit to zero and offset it, all of that stuff. And then we kind of gradually, gradually added that stuff back, because when we gave a concession to a customer, we might say, okay, we'll give you a 6 or 8% reduction in your revenues, but we'd write into the contract that when oil got back to $40, we got a 12% bump from where we were then, right? So
you recouped it.
So we could recoup the what we had given up during that time. And so as we began to recover those revenues, we reinstated, we paid for everybody's gym memberships, right? As a little perk, right? And so we said, we're going to stop paying for that for right now. When we start getting the revenues back, we'll institute those programs.
Yeah. So you were a minor league baseball player how many years ago?
100 pounds ago.
22 years ago, something like
22, that? Yeah, from 2000 to 2003.
Okay. And so you now have 20-year-old kids, something like that?
Mm-hmm. Yeah, my oldest is 20. My oldest turns 20 next week. She's in Baton Rouge, going to school in Baton Rouge also. She's a sophomore. I've got the freshman softball player at LSU. Then I have a junior in high school and a 12-year-old boy. The Caboose is the only boy. I had 3 girls and a boy.
By the way, Dan's always inviting all his tall friends on here that are all former stud athletes. I get credit for bringing you in today. So finally,
there we go. Yeah.
Yeah, this is great.
Yeah,
good.
Exactly. Will the kids work in the business? Are they interested in the business?
I don't know. I think I don't know if they're interested yet. They might one day.
And so
once they're out of money.
Yeah. Right.
Well, do they look at? Do they say, well, my dad works in the quote unquote oil and gas business, and you're right. We hear a lot about the younger the younger generations, thinks that oil and gas is bad. What do your kids think about this? Do you get grief?
They've been conditioned from pretty early on.
Okay.
To make sure that they understand.
They properly respect.
Yes, that's right. Because not only is it like their childhood and raising and the things that are provided for them, but also me and the way I was raised as well. So, it's a couple generations worth of oil field trash. That
London trash.
Yeah, that's right. But they understand. They get it. It's been a business that's done well to provide for what they want to do and their lives, and they have the proper respect for it.
Yeah. Mickey, are there other businesses that fit with the compression business?
I think there are, and it's to be determined. So, we talked a little bit earlier about, the emissions quality of our fleet, and that we're focused on that, and nobody's really forcing us into that, but we think it's something that is important to be a responsible operator of compression and do the right things. And so I think that potentially an acquisition of a company that specializes in emissions monitoring or something like that could potentially make sense as kind of a bolt-on that is a company, a business that really complements ours and makes us better. Look at maybe a new technology or something like that it could be really interesting, and I'd be really open to looking at something like that. And I think from an M&A opportunity too, I think that there's I told you earlier, you were asking about consolidation in our customers. I think consolidation in our industry has generally been a good thing as well. It's early on when I was a younger man in this industry, it was pretty fragmented, and there's been general consolidation we bought Pegasus, and Archrock bought a company called Elite, and USA and CDM combined, and now there's kind of 3, like you said, a 3-horse race now. It's kind of 3 main players in the industry, and consolidation, I think, has generally been a good thing for our business, our industry, and there could be opportunities along that line too.
No moss is going to grow under your feet.
No.
The consistency part of this is really sounds incredible. That's why it doesn't. You mentioned oilfield services. Is that how you would describe yourself?
No,
okay.
no.
Yeah.
I was trying to make the point that we're not oilfield.
Yeah,
services.
I wouldn't think so.
I think I mentioned earlier, we really, as we were going through the IPO process, we talked to these investment banks and they're like, man, you guys aren't, we thought your comp group was midstream G&Ps. And they're like, it's not. It's really pipelines. It's a take or pay contract, and it's long-term, and it's long-term contracts, and the revenues are sticky and stay steady as she goes. It's really, long-haul pipelines is what we look like the most, rather than, midstream guys that are, like I said, volumetrically exposed.
Yeah, gathering companies that if production goes down, their volumes transported.
That's right.
Down. Yeah, that's interesting.
Well, is there anything else you'd like to talk about that we've missed? Have you ever done a podcast before?
I've not ever done a podcast
Well,
before.
Everything from here on out will be downhill.
This has been great, though.
Good.
I've enjoyed it. Like I told you earlier, I love telling the story about our business, our company. It's something that I'm very proud of, and started it with, one employee, and now we're a publicly traded company.
That's wild. That is a wild story to really, when you think about 13 years in.
Yep.
Right. And you've got some gas in the tank if you're in your early 40s. So, wow. Imagine when he's as old as me. Should we do the lightning round?
Yes. Do you have questions, or this is?
We're gonna impromptu the.
Okay.
Lightning round.
I've got some that I always go to.
Yes.
I have one that I think is going to stump him a little bit.
Okay. So, Mickey, the rules on the lightning round are they're basically yes or no or A or B type of answers. You don't get to expound on it. It's just a little bit of a way of getting to know you a little bit better and kind of fun here at the end. So
I'll do. Yeah.
You start.
All right. Cash or crypto?
Cash.
Smart move.
Wind or solar?
Solar, I guess.
Do you think the Ukraine conflict goes into the second half of 2024?
Yes.
Taylor Swift concert or Beyonce concert?
Taylor Swift.
So this one I think is going to stump you.
Okay.
But maybe not. Tulane baseball.
Yes.
Or LSU softball.
Oh. Yikes. Roll wave.
There we go.
There we go.
Whataburger or In-N-Out?
Whataburger.
Because of the timeliness of this right now, we're going to go Rangers Astros.
Astros.
And who do you think is going to win?
Oh, I just said the Astros.
Okay. That's what we were thinking.
S&P 500 for the remainder of the year from here. Are you bullish or bearish?
Oh, I would probably say bullish, but I'm not the expert to ask that question.
You have another one there, Dan?
Yeah. So, L.A. or Miami?
Miami.
I'm always going to let Dan finish up with the...
And...
So if you've ever listened to the lightning round, this is Dan's go-to.
Okay. We end every podcast with, will the Houston Texans make it to the Super Bowl in the next 10 years?
Yes. I believe in D'Amico Ryans. I think what he is building is going to be awesome.
Nice. I like it. Mickey's now one of my most favorite guests ever.
That's right.
Because he didn't just say yes. He said yes.
With
and why.
a reason.
Yes.
I actually am buying into this D'Amico guy, too.
And I think C.J. Stroud is the real deal, too.
It's been an
fantastic.
upside surprise. I
I've
been a class act.
Giving away my tickets for the last 2+ years.
Yep.
I'm going to have to start going.
Yep.
I'm
started
3-2.
Yeah.
3-3.
3-3.
They're 3-3 right
Okay.
now.
Yeah. Mickey McKee.
Yes.
CEO of Kodiak Gas Services.
Yep.
KODIAKGAS.com.
Yes, sir.
We really appreciate you joining us today. It was fun.
Good luck to you,
Thanks
sir.
for having me.
Yeah, good luck to you.
Thanks.
Enjoyed it.